that. Now, we've been talking about oil, it seems, all morning, and for good reason. It's been an extraordinary moment. Oil plunging below zero for the first time ever yesterday in New York, with virus slashing demand and US storage tanks filling up rapidly. The final trading session for the New York May benchmark contract meant traders were paying anyone to take oil for delivery off their hands. Well, for more on what this means, we're joined by Alex Booth, who's head of market analysis at Kpler. Alex, welcome. Good morning. Thanks for being with us. Now, the May contract, WTI, ends today. As far as we know, the June contract still above $20 a barrel. Brent still in that department as well, though falling. Where do you see all this going?
Hi, good morning, Roger and Nira. It's a very good question. I think what we need to remember is there are some kind of very specific technicalities around what's happened with the WTI contract for May. But ultimately, they reflect the situation in the US with regards to the physical delivery of that oil. We've seen repeated builds over the last few weeks in Cushing, so that's the delivery point for this contract, in the realm of kind of 5 million barrels a week. We tracked another kind of 4 or 5 million barrels that should go into storage when reported in the data this week. And that really leaves us only with about 15 million barrels worth of usable space at Cushing. So by the time you're getting into the kind of first, second week of May, that's really it for Cushing. The reason why I say it's very specific to this contract and to Cushing itself is that there isn't per se a problem for storage in the US as a whole yet. If you're looking at, say, the Gulf Coast, if you're looking at the Midwest, there is still space available. There is still capacity. It's just not in Cushing, basically. So that it's a very kind of unique situation that we're in exactly at this point in time.
Yeah.
But that doesn't mask the problem that the US has going forward, and the world as a whole, I would say.
No, absolutely not, Alex. I mean, I spoke to Harry Chilingurian of BNP Paribas earlier, who said, look, what also happened is long-only funds needed to get out of the May contracts at any cost. But given what you've just said, are we going to see this happen again to the WTI June contract when that comes closer to expiry? And is Brent going to chase WTI lower as well?
Yeah, so as I say, in the next few weeks, we really should see Cushing fill. Ultimately, that isn't going to draw down through May or into June or into the kind of the June contract, because there's nowhere for that oil to go. Yes, you can see we'll see storage fill up in other locations, but in terms of the kind of the actual physical delivery, there isn't anywhere else for it to go in Cushing. I think what's interesting, or what's actually going to make the situation a bit worse in the coming weeks for the US, is that whilst imports into the country have been lower in recent weeks, below the kind of 2 million barrels a day seaborne imports, we're actually seeing that, expecting that to increase over the next few weeks, upwards of 3 million barrels a day, basically. And that's with oil kind of coming in from long-haul destinations, say Saudi Arabia and Iraq, which, okay, they may end up sitting offshore, not actually being able to discharge into the US, but that's still going to apply further pressure on the US market for a good while to come.
Absolutely, and you start to question if and when those production cuts might come from the US. Thank you so much, Alex Booth, Head of Market Analysis at Kpler. Great to have you with us. And of course, we've been talking about the May contract on WTI rebounding. It is still negative. Brent is more than 9% lower. Stocks lower as well. This is Bloomberg.